If you have ever wanted to trade or invest using options but don't know where to get started, this is the video for you. Today I will show you how to create a paper trading account in less than 2 minutes. I will show you step by step how it's done, and it is super easy. I will then place a live trade using one of the easiest option strategies that I use every single day. If this is something that you see value in, I would appreciate if you could smash that subscribe button and gently tap that bell notification as I create weekly videos on investing and trading using options. So we'll be creating a paper trading account using Interactive Brokers. Interactive Brokers is the official broker that I use to trade options, and I've been using them for a number of years. Interactive Brokers is one of a very limited amount of brokers that actually offer a paper trading feature. And the best thing about this feature is that it doesn't expire. You can use it for as long as you want. To get started, I've left a link to Interactive Brokers in the pinned comment and description down below. Now, full disclaimer, this is my affiliate link, and if you were to open a live account, then we both would receive free shares based on how much you deposit. So again, it's free money at the end of the day. Once you click the link, the next step here is you click on open account. Now, this is the only page you need to fill in to get the paper account working. Let me just do this very quickly. Once you've completed that, you will need to confirm your email address. Let me just do that now. Now, you should get this email. All you need to do here is verify the account. Once you verify the account, you will come into the username and password screen. So enter your username and password, and then what will happen, it will ask you whether you want to create an individual account and all the other good stuff. So if you just click on individual, click on continue. And this part here will ask you to input all the information about you if you were to create an actual brokerage account with Interactive Brokers. But you don't need to do any of this. To show you that this thing works is you log out of this, and then you go into paper trading, log in, and what you'll find is you have a paper account with £1 million in my example, but it'll most likely be inside your local currency available to trade. Now, there are 3 ways to trade options using Interactive Brokers. The first way is through the desktop application Trader Workstation. The second is by downloading the app on mobile and tablet. And the final way is via the web using the Interactive Brokers website. So for today's video, we'll be using the app for mobile and tablet, which, to be fair, I use that to place 95% of my trades. The other 5% is done through Trader Workstation, and some more complex option strategies. The mobile app isn't fit for purpose because it is limited in its features. Before we get into the app and place the trade, we need to decide which option strategy to deploy and what stock to trade it on. There are a number of stocks which I would love to own, but in my opinion are quite overvalued currently, and I would need the price of these stocks to come down. The beauty about options is that we can generate income while we wait for the stock to fall to our desired price. We do this by selling what's called a put option. When we sell a put option, we are obligated to buy 100 shares of stock at a certain price by a certain date. So for example, let's have a look at Google stock. At the time of recording, Google is currently trading at $97 per share. Let's say that I believe Google stock is worth $85 and I wanted to buy it at $80. I can sell the $80 put option where I will receive a premium, i.e. money, from the option buyer. During the duration of this contract, the buyer can exercise that option, selling me the right of their 100 shares at $80. Now, let me show you how you would place this trade and how much premium we would get using our brand new Interactive Brokers paper trading account. So we're here on the IBKR platform on the mobile application or the tablet application. They are exactly the same thing. And we are in my portfolio screen. You can see I've got a few positions on here, just practicing, coaching with clients, what have you. But what we're going to do right now is go place a put option on Google. So the way you do that is you click on the trade button at the bottom. And again, these are just the recent symbols that I've looked up here, and you can see Google on there, but if you are brand new, you probably wouldn't see that. So what you need to do is go to system lookup, either search Google or type in the ticker symbol, which is GOOG, and then hit on the drop down. And what you want to go to, you want to go to options and spreads. So when you click on options spreads, what it does, it brings up the option chain for Google. Now, what we're looking to do here is select an expiration date. Generally, I like to sell options anywhere between 40 to 60 days. But what we're going to do for this example, we're going to go to the March the 17th, which is the monthly option for March, which has the most liquidity and the most volume, and that is 20 days out. And what you'll see here, you've got the call side and you've got the put side. So not to overcomplicate things, and again, I've got a number of videos on this channel that talks about different strategies, calls and puts and all that kind of good stuff. But what we want to do is we want to sell a put on Google for $80 strike. So in the middle, you've got the strike. In the middle, you have the current price of $97.26. So what we want to do is scroll all the way up till we get to the $80 strike. And you can see over here, if you look at the put side, the cost of selling a put or to buy a put is between 19 to 20 cents per share. And because we're trading in options and we trade in number of contracts, one contract equals 100 shares, two contracts equals 200, etc. What you generally need to do if you are doing one contract is times this number by 100. So instead of 19 cents per share times by 100 is $20 for 100 shares. So what we want to do is, if we want to sell an option, you always click on the bid price, and you'll know that if you're entering this trade for a credit or will receive some sort of a premium, is when you look over here at the bottom, it will say credit over here. And you've got the ask price, the mid price, and the bid price. So it's a fairly liquid underlying. Google is, so you can see there's only a penny wide. And once we've selected this, what we want to do is click on order, and that brings up the order tab here for Google. So just a reminder on what we're trying to do here. We are selling the $80 put on Google expiring March the 17th. So what we're saying is, on the date of expiration, if Google is $80 or below, we will then have to buy the shares of Google at $80. Now, the advantage of doing this than just doing a pure limit order in terms of buying Google stock is that you are going to get paid $20. So if Google stays above $80, you get to keep that $20 no matter whatever happens. And then next month in April, you will then sell another put option at $80, or if Google has dropped slightly to $82, you might want to go a bit further down to $75. But you know, based on your analysis or your gut feel, whatever it may be, that you want to own Google shares at $80. So what we're going to do is select market over here, because A, it's the liquid market between Google, between $19 to $20. But also, when you trade this on demo, it can sometimes take a while to get filled based on how the mechanics work in the back end. And we know that we're happy to, whether it's $19 or $20, we know we just want to own 100 shares of Google at $80. So if you were trading this stock, then I would consider doing this at a limit order, working your mid price. And if you don't get filled, then tick up or tick down from there. So what we're going to do now is select sell. This should get filled pretty quickly. And you can see here that we are now filled. So if I then go back to the portfolio screen, you will see here that now we sold the $80 put option expiring March the 17th on Google, and we have collected. If we actually, I'll show you where you can see how much you actually collected. If you go to more, go to order and trades, you can see here that you have your trades that has been executed. You sold it at this time for one contract. The commissions was $1.48, and we received $19 in premium. So when I said between the $19 and the $20, we got billed at the bid price of $19, and there is a small commission that you do place when you place trades on interactive brokers, but they're very small in the grand scheme of things. So that's how you sell a put option. And again, you can do this on any stock. Obviously, Google at the moment is an $80 stock, so you would have to put down $8,000 if this was in the cash secured count. If it was in a margin account, it'll probably be about $1,600, so about 20% of the current the stock price there. So again, have a little play with it. Comment down below once you placed your first ever put option. Let me know what your thoughts are. So what you have on the screen now is a couple of new strategies that I've been playing with. Again, you can test these strategies on the demo account, so I strongly suggest that you check out those videos, and I should see you guys in there.